central banks have been accredited of being a big buyer.
Yeah.
They have been incentivized, so to speak, because their money is at risk in the US. Not that they pile all their money into gold. But other than that, I think part of the reason is geopolitics. I always used to hate citing geopolitics as a reason because geopolitics always abates again and is temporary. But I think we're really out of the peaceful period we've had since World War II and the new era. And then there's some other drivers, but you want to get a word in here.
Okay, but the 8 standard deviation move, Axel, I mean, Paul Sweeney's got 8 questions, but the 8 standard deviation move is the interest payment now that governments are paying on their debt in their annual deficit. I mean, come on, gold is up because finally the interest rate shell game's unraveling, right?
Well, it's the trajectory, and it's both on the fiscal and the monetary side, right? On the fiscal side, I think most people are aware that the deficits are unsustainable. We now have both political parties. They always say the other guys spend it on the wrong stuff, but they're not any better. But the monetary side, everybody's glued on the next rate cut. But what we don't have what economists call a reaction function. What we have is the mood of power. And there, it's okay, he has an easing bias. And not knowing what's going to happen, I think, is also not helpful. It adds volatility to the markets and ultimately does help gold as well. And so we have this somewhat perfect storm here. And of course, one buyer that's been missing in the gold space is the speculator. They're in the meme stocks, they're in the digital assets. And maybe if we see a good move here, they'll come back to gold. And that could, of course, create its own set of dynamics.
So I've heard the argument that maybe countries that are not friends to the U.S., maybe they're diversifying out of the dollar. And if they're diversifying out of the dollar, where do they go? And maybe where they go is gold. Does that make sense to you?
Well, yes, except I think we should be aware that they don't have good alternatives, I think, as everybody agrees. And gold is but one beneficiary. So it's on the margin, gold is a beneficiary. But yes, I mean, if Russia being the most obvious example, but if you hold U.S. assets, they might get seized. But if you're another country that might have plans not consistent with U.S. policy, you're also going to think twice about it. Increasingly, countries are more willing to use financial sanctions. And yes, gold is one of the beneficiaries in that. It doesn't mean people can turn their back on the dollar, but it does mean that these countries are looking for ways to diversify.
From your perspective and from your work, what's the highest correlation for gold? If we're trying to get a sense of where gold is going, where do we look? Do we look to the dollar?
It's an excellent question. It's not correlated really to anything in the long run. It does zoom in and out. The one correlation we see most of is the longer-term real yields. But as you pointed out earlier in the program, right, real yields have been moving higher. So even that is not consistent. So gold is the saying that where these correlations, they are morphing. They're not. Whenever you think that you figured out something, then you're going to be disappointed that those sort of correlations are breaking down again.